if we get passage of the market structure legislation in Congress. I think if that happens, it's all clear. Solana's going to new all-time highs. ETH's going to new all-time highs. Bitcoin's going to new all-time highs. I think we're off to the races. But you have to work through this process of OG holders who are willing to sell. Once those clear, then you'll see the kind of spike move that we saw in gold. We think that could happen in 2026 for Bitcoin and indeed for some of these other assets because that demand is persistent. It's more than new supply. And eventually the sellers will exhaust themselves and we'll be off to the races.
The crypto market has always been defined by cycles: boom, bust, disbelief, and rebirth. Right now, many investors feel exhausted. Sentiment on crypto Twitter is weak. Prices feel heavy. The 4-year cycle narrative says danger is ahead. But according to Matt Hougan, one of the most respected institutional voices in digital assets, that pessimism may be exactly why the next phase is setting up to be explosive. Hougan starts with a clear conviction: crypto in 2026 will look very different from crypto today. Despite the current negativity in the market, he points to two massive structural changes that didn't exist in prior cycles. First, crypto now sits on far firmer regulatory footing than ever before. Second, institutional interest is no longer theoretical. It is active, accelerating, and price relevant. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
What are your expectations for crypto in 2026 and beyond?
I think it's going to be a massive year for crypto, actually. I know crypto Twitter is a little bit down on its heels, a little bit depressed, but from my seat, speaking with institutions, speaking with regulators, there's been two massive changes. We're now on a relatively firm regulatory footing, and the level of institutional interest and investment is enormous and accelerating. I think there's too much buying coming from institutional investors for the price to stay down in 2026. So I expect it to be a breakout year for crypto. Well, I think there are two things that end at the end of this year, actually. So I think turning the page, ringing in the new year of 2026 is going to be one of those catalysts. Those two things are, I think a lot of people have been selling this year, trying to get ahead of the 4-year cycle, right? According to the 4-year cycle, 2026 should be a down year. I think you saw a lot of OGs selling in 2025, trying to front run that. By the time we get to January 1st, that's over. You can't front run something that's already here. So that selling, I think, will dissipate. The other thing was the October 10th liquidity washout, the big leverage blowout. I think people have been worried that there have been companies that will sort of come to the surface as having failed. If that's going to happen, that will happen before year end. They won't want that to spill over into the new year. So I think the two big forces that have been sort of weighing on crypto will be washed away, and left instead will be this bullish force of institutional adoption, of regulatory progress. And I think that'll just push things up. In terms of what could catalyze the big, dramatic run up, I think it's if we get passage of the market structure legislation in Congress. I think if that happens, it's all clear. Solana's going to new all-time highs. ETH's going to new all-time highs. Bitcoin's going to new all-time highs. I think we're off to the races. I think it's something like 60-40 or 70-30 that it will happen. You are seeing real engagement from Democrats and Republicans hammering out issues, right? There's recently been a big Democratic piece that sort of lays out the remaining issues. It's framed relatively optimistically. I do think both sides, or rather, neither side wants to go into the midterms having just blocked crypto, right? We learned in the last election that the crypto electorate is large, strong, and numerous. I don't think they want to have that on their resume. So I'm optimistic we'll get there, but it's not 100%. And if we do, it'll be Q1 or early Q2. If it doesn't happen by then, it's not going to happen because people will be in campaigning season. So early Q1 or early Q2. And again, if it does happen, I think it's straight up. I think it's an enormous bull run. A lot of people have been pointing to the fact that gold has gone skyrocketing this year, right? Why has gold gone skyrocketing? It's because of central bank buying. But here's the thing that people don't talk about. The central bank started buying gold in 2022. They bought 1,000 tons in 22, 1,000 in 23, 1,000 in 24, 1,000 more this year. But the price only really ramped this year. The reason was whenever you have more demand than supply, you have to exhaust the other people who are willing to sell. Since the ETFs launched, there has been more demand than supply for Bitcoin, for Ethereum, and for Solana. The ETFs are overwhelming the new supply, but you have to work through this process of OG holders who are willing to sell. Once those clear, then you'll see the kind of spike move that we saw in gold. We think that could happen in 2026 for Bitcoin and indeed for some of these other assets because that demand is persistent. It's more than new supply. And eventually the sellers will exhaust themselves and we'll be off to the races.
Matt Hougan believes the passage of U.S. crypto market structure legislation would be a game changer for the entire industry. Clear rules would unlock massive institutional capital and remove one of crypto's biggest uncertainties. He estimates a 60-70% chance this happens in early 2026, before election season takes over. If it passes, Hougan expects Bitcoin, Ethereum, and Solana to move quickly to new all-time highs, kicking off a powerful institution-led bull run.
Why did you guys decide to do a Solana ETF, and what is so special about Solana?
The beautiful thing about Solana is that when you buy it, you're making two bets at once, and they're both really good bets. So one bet you're making is that stablecoins and tokenization will be more important in the future than they are today. Everyone thinks that's going to happen, right? The chair of the SEC went on Fox News the other day and said all U.S. assets will be tokenized and trading on blockchain rails in a couple of years. That's $68 trillion moving through blockchains like Ethereum and Solana. So betting that stablecoins and tokenization will do well is a pretty good bet. The other bet you're making is that Solana will gain market share versus its competitors. It's been doing that for the last year and a half. It has a strong technical footprint. It's in a better regulatory position. I think that's a good bet as well. The wonderful thing is if you get both of these bets to work, they multiply. It's not 1 + 1 = 2. It's 2 × 2 = 4. And you can get this enormous run up, right? You could see there are worlds in which Solana 10x's from here. Right? If Ethereum 2x's, it's like $1 trillion asset. If Solana catches up to that, it's $1 trillion asset. That's like more than a 10x return. And so it's just a really attractive investment because it's so small relative to the scale of what it's going after. It's going after $1 trillion market cap. It's less than $100 billion. There aren't that many things you can say that about. You can say that about Solana. The crypto is a market that everyone can own. I mean, that's sort of the beautiful thing about it, right? The Harvard Endowment can own crypto exposure, and so can my father. And in fact, they can do it through the same ETFs. So I think we're going to see strong retail adoption and strong institutional adoption. Again, particularly for retail, they like that challenger story, right? They like to look at the landscape of layer ones and find the one that they think is the most appealing, that they can argue for, but the market hasn't fully recognized its potential. I think you could make a good argument that Solana fits that description. I know that crypto natives are resistant to regulation, but most of the money and most of the people want some level of regulatory certainty before they're willing to move their real world assets into this on-chain world. So things like the market structure bill would be a big deal. The second, which has gotten a lot better and where Solana is really a leader, is UX. UX in crypto, user experience, is still not perfect. I mean, as someone who uses it regularly, I think you would probably agree. We need to have that continually dialed up. If we get a strong regulatory footing and we get real UX, I think you're going to see enormous growth. I'll add one more catalyst that I think very few people talk about. Under the previous SEC administration, if you were an entrepreneur and you wanted to build something cool, you would look at crypto and say, if I do it there, there's a good chance I'm going to go to jail, right? That's not a good look. And I think it kept a lot of smart people out of this space. I do think we're really early in what's going to be sort of a Cambrian explosion of amazing new applications, because all of a sudden we have this great technology that can move money at the speed of light, that can be programmed like a computer. And now entrepreneurs feel safe building in it. And I think that's something that will pay off over the next 3 to 5 years. And I don't see many people talking about that, but I think you're going to see some really exciting things bubble out of that fact.
What do you think, was that change from, 4 years ago to where we are today?
Yeah, I mean, certainly it was broader than just the SEC chair, because you saw it at the SEC, at the CFTC, parts of the CFTC, at the OCC, at other three-letter administrations, right? A sitting senator had an anti-crypto army. I mean, it was pretty explicitly against this technology. And now we have a more reasonable approach. We saw, again, crypto won the election, hundreds of pro-crypto congressmen enacted, and now everyone is building in this space. The other important thing that happened is Wall Street decided it wanted to build in crypto as well. A lot of people wonder, will we reverse this regulatory progress? I don't think so. When BlackRock's biggest fund by revenue is a crypto product, when Citi and Goldman Sachs and JP Morgan have crypto and blockchain divisions. So the other big change is that Wall Street became comfortable and decided they wanted in. It wasn't just a disruptor, it's also a profit opportunity. I think those things together have really changed the landscape in a permanent way for crypto.
What do institutions care about when they're looking at crypto? Is being anonymous really important, or is it more like the speed and kind of how cheap transactions are and how the ecosystem is to use?
Yeah, I think it's speed and cheapness and the new things that you can do with it. One thing that they're probably thinking about, which maybe crypto doesn't think about enough, is that when you make something really low cost and you make something really fast, people do much more of it. If you think about the early days of texting, it cost 30 cents to send a text, and very few people could get it. No one texted. It became free. Everyone did it. If you think of even stock trading, it used to be that it cost $200 to trade a stock. Then it was $19. Then it was $6 and $2. Now it's free. And the level of transaction activity went to the moon. So I think from a traditional firm, they're looking at something like stablecoins and tokenization and saying it's much cheaper, it's much faster, it's global, it's 24/7, 365. These markets that are a certain size today are probably actually going to be 10 times bigger. The payments market is going to be 10 times bigger. The trading market is going to be 10 times bigger. And that's what they care about. They don't care about the libertarian ideals. They don't care about the pseudo-anonymity. I can't say it either. The fact that you don't know, a little bit of privacy, they don't care about that. But they do care about the potential of these markets, which are global in scale and will grow, I think, 10x plus once we make them cheap, fast, and always on. They say about disruptive technologies that they have to be 10 times better than the existing system in order to catch hold. If they're just 2 times better, people are too slow to change. And I think that's something that people in the US sort of stumble on when they look at crypto. They're like, yeah, stablecoins are a little faster, but I like my credit cards and my airline points. The reason I raised that is I think the first places that crypto will really catch on, the first places that stablecoins and tokenization will catch on, are markets that are poorly served by the existing financial infrastructure. So stablecoins as a savings tool in markets with high inflation, stablecoin payments as a B2B tool in markets where there's a lot of friction, tokenization in places where you can't easily access U.S. capital markets, tokenized stocks, making them available globally. Those are the places where it will catch hold before, my uncle is trading tokenized stocks in his Schwab account. I think that'll happen, but I think it'll happen first in these other markets that are underserved. The big thing is that, look, crypto is on a 20-year journey. And that journey will have big ups and downs. And the people who get hurt are the people who panic either at the top or the bottom. They chase returns up or they panic at the bottom. If you're investing in crypto, if you're investing in this new global financial infrastructure that's 24/7, faster, cheaper, better, that's going to play out over the next 10 years. And I would align sort of your investing strategy with that kind of time frame.
Hougan closes with a reminder. Crypto is on a 20-year journey. The people who get hurt are those who chase hype at the top or panic at the bottom. The winners align their strategy with the long-term transformation of global finance. Faster, cheaper, global, always on. That's the bet. On.